Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. The recent moves higher can be traced back to the daily key reversal up made on the 9th of November. This in turn led to the second week in November making a weekly key reversal up, which in turn ignited the latest moves higher. Since moving over the widely spaced congestion zone between 218.05 to 229.15 at the end of November, the market has had a 2 steps up, 1 step down type strategy. Such action is synonymous with a possible topping action, though it is still early as yet. However, I would point out that the key feature for each of the past 2 weeks has been the large daily key reversals seen at the height of last week's market on Tuesday last week, and the even bigger daily key reversal down seen at the start of the week before. It seems that this area between the 2012 high at 241.05 and the October 2011 high at 255.05 may be coming a bit of a stretch too far. Now, admittedly, we are still having higher lows last week compared to the week before, which indicates a still bullish orientated market, as we have the higher highs, over the last 2 weeks. Yet with all this, there seems to be a degree of hesitation in this market right now. Now, it could easily be resolved by punching up through the October 2011 high at 255.05, but it requires the incentive to do that. And unless this action from mid-November until now is a halfway hesitation type action, well, then we may well have a topping action taking place. There is one more feature of the recent action I'd like to highlight, which may sway this market significantly. We have had multiple piercings over the November 2011 high at 243.40. This is the one piece of resistance in between the 2012 high and the October 2011 high that's of any note. So despite these multiple piercings of this overhead resistance, there has, so far, not been a consecutive close over the November 2011 high at 243.40. We've had 3 closes and 2 openings over this level, yet each close has been separate. As I said earlier, there were no 2 consecutive closes over. This, in addition to looking at the October 2011 high and to see if we still have the high highs, are the things to watch out for here to see if this market really is just taking a breather before trying higher or is contemplating a topping action. London coffee. Since the middle of September until late October, the market maintained a sideways action, roughly between 2100 below and the August 2017 high up at top at 2173. In late October, the market took a move higher up to the next congestion at 2279, or what was the whole of the 2017 high, where, somewhat surprisingly, given the amount of ammunition that had been stored up over the mid-September to late October period, the market started to have a hard time pushing up through. The 2279 level was breached on 2 separate occasions, but each time there was the one single close over the 2279 level. And that was before the market dipped back down to the earlier congestion between 2100 to 2123. However, each dip was higher, which is usually indicative of a bullish incentive. As how the highs were also higher, another indicator of the same. Thus last week, or more exactly 2 Fridays ago, the market broke higher, then exploited this break higher last week and this week over the key 2279 level. However, it is now only having an indecisive time it seems, not seeming to wish to try higher nor lower as well, at least not just yet. You see, there are 2 other features that have been supportive of this market and which I have previously been at pains to mention. These 2 are, firstly, the rising medium moving average, currently at 2213. that has acted as a supportive buffer below since mid-April. Do not underestimate this one. It was most recently tested only 2 weeks ago and easily held up prices. Secondly is the optimized late January to late July bullish Andrews pitchfork. This optimized bullish Andrews pitchfork has been very successful in holding up the market and also capping it since late July. In recent days, it has been the lower time, currently 21.76. And that is just below the medium moving average, and they have seemingly bolstered each other as supports. Additionally, there's also been the middle time, currently 23.18, of this same pitchfork that had initially provided support, then resistance, and most recently, well, acting as an attractor, if you will, for the market. Overall, unlike the New York contract, the London contract looks more robust, with opportunities on the upside until both the medium moving average and the lower time are broken. Then the bullish incentive will still reign supreme until they are broken. We have been within this optimized bullish Andrews pitchfork since late July. We are still within this bullish Andrews pitchfork, and until we have a confirmed break below, minimum 2 consecutive closes, we must regard this pitchfork as still running the bullish incentive of this market. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.